Today is Wednesday, April the 9th, and today is when Trump's explosive tariffs on countries around the world come into effect. The US, the world's largest economy, has put tariffs of 104% on the world's second largest economy, China. But who are the losers? And is there art in these deals? Financial economist, and I'm hoping market soothsayer Victor Hill joins me now. So, Victor,
Good morning, Sarah. Good to be with you again.
good morning. I tell you what, it's been a long day. I was up very, very early this morning just to see how the Asian markets would open, and I didn't get a surprise. They're
Well, there's
down.
never a dull moment, is there? I mean, every morning it's you wake up, what's he done now? And we really are in new territory right here.
So,
I mean, yes.
are there precedents? I'm just wondering what's motivating him, Victor?
Well, there are historical precedents. I mean, first of all, I would just say to contextualize, tariffs were the norm in terms of economic history until really quite recently in world history. And, states have always erected barriers of one kind or another against the flows of the imports of other states. And they have generally tried to protect their own industries, and particularly the farming sector as well. So let's just contextualize this. We could say that the era of globalization began on 11th of December 2001 in its current form. Why that date? Because that was the date that China joined the World Trade Organization. And I think it may very well be the case that looking back, we will say that globalization ended on 2nd of April 2025, so-called Liberation Day, when Trump got up and announced this slew of really quite large tariffs, significant tariffs against virtually all of America's main trading partners. Now, the World Trade Organization itself emerged in 1995 from what had previously been called the General Agreement on Tariffs and Trade, which had subsisted since 1947 in the post-war economic reconstruction era. And that was a kind of a gentleman's agreement, that we wouldn't put excessive tariffs on one another's trade flows. The World Trade Organization was the first real sustained attempt to eliminate tariffs across the board. And to some degree, it was successful. Now, tariffs are not the only thing which inhibit the flow of goods across borders. I mean, tariffs are very significant in the impact that they can have. But as we know in this country, on the basis of our bitter experiences in trying to negotiate our withdrawal from the European Union between 2016 and 2021, it's not just a matter of what tariffs are imposed. You can have a free trade area, but you still might have so-called trade frictions, to use the word that the Europeans like to use, and that can subsist in the form of excessive regulations, inspections, and procedures for how goods should be delivered to the importing country. And we know that in terms of the UK-European relationship, actually trade flows are probably around what they were back in 2016, but the expected rises and increases in the level of that trade have been substantially attenuated by these so-called frictions, with the Europeans not recognizing the validity of British vet certificates and so forth. And the third form by which trade flows are inhibited between nation states is that countries often, and in fact usually, subsidize elements of their economy in order to make them more competitive. And this is particularly the case in terms of agriculture. Farming all over the world is subsidized, which means that farmers can then export their goods at artificial prices. And there's only one country, to my knowledge, and it's a country that I like very much and I was very recently, which doesn't subsidize agriculture. And that, you know what that is, Sarah? It's New Zealand. And, and therefore, New Zealand is known as the larder of Asia. And they have an enormous output of foodstuffs, which are exported across the continent to places like China and India and Japan and well beyond. And it hasn't really, it hasn't in any way inhibited the vibrancy of their agricultural markets. So that's to put the tariffs in context. Now, this is a big shock to the international trading system, to the world economy, and indeed to the financial markets. But I think one can argue that some of the reactions, particularly in the equity markets, have been overdone. So where would you like to go with this? How do you want to slice this up?
So I do want to go back to Trump's motivation, because when I watch him and I listen to him, it reminds me of Gladiator, the film where it's thumbs up or thumbs down.
Yes.
So what is it? Does he believe his own genius? Is he a genius?
Well, there is an element of the late Roman Empire about all this. And I would just say that the nearest historical parallel in terms of modern history is the Nixon Shock of 1971, when Nixon unilaterally declared that the post-war Bretton Woods monetary system was finished and took America off the gold standard, forcing all other countries to effectively float their currencies in the financial markets, in the world currency markets, such that they were no longer pegged to the dollar anymore. And that initiated a completely new era, which had massive repercussions. He also simultaneously, by the way, imposed wide-scale tariffs across the board. But the economists tend to suffer to some extent from groupthink. Virtually all mainstream economists will tell you that tariffs are bad because they restrain trade, and that they are lose-lose type policy rather than the win-win of free trade. But Trump, as we know, is not an economist, and he doesn't really care that he's upending the traditional orthodoxy. What he wants to do is to change the system, what we were calling in our last conversation the New World Order, and to correct certain imbalances which he perceives are to America's disadvantage. So, yes, I like this idea of Trump as a kind of a late Roman emperor. There are parallels between Western civilization and late Rome, in so far as the 4th century Roman Empire was afflicted by massive inward migration from the northern border, the Rhine-Danube border. That was one destabilizing factor. There was a massive currency debauchery, and we know this because the silver content of Roman coinage declines very rapidly in the late 3rd and 4th centuries. There was also pestilence. We had COVID, but they had much worse things. And they also had, believe it or not, climate change, because there were adverse changes in the climate, which made the growth of crops more erratic. So yes, you can see Trump, if you like, as a man who is out to impose a new religion. So Constantine the Great comes to mind. But although Constantine's reign was highly successful, that of his successors was not. And again, you see, I think we don't regard Trump as any kind of historian. And we observed in our last conversation that he's not really a very bookish man, but actually he knows a lot of history. And in his inaugural address back in January, the one historic US president that he name-checked was William McKinley, the 25th president. And McKinley's presidency was noted for American expansionism. America acquired new territories in the form of the Philippines, Guam, Hawaii, and Puerto Rico, and also because he slapped massive tariffs on America's main trading partners. And this is the objective of the current Trump policy is to reshore manufacturing, which was lost during the era of globalization from 1995 or 2001. So he wants those Nike trainers that are currently being manufactured in Vietnam to be manufactured in Kansas or wherever it might be. And that means the relocation of productive capacity. Now, to some degree, of course, it's very early days right now. I mean, the tariffs only came into effect, what was it, last night or the day before? So he's already talking about generating $2 billion of revenue for the federal government per day. Well, I'm not sure if that will actually turn out to be accurate, but it's certainly going to be a very significant sum of money. But in terms of investment decisions, we noted last time that Honda has already decided to build the Civic model in a factory in the US rather than one in Mexico, as was previously planned. And just this week, we learned that JCB, that's one of our major private companies. It's the largest private company in the UK, and it's a world leader in digging equipment and earth moving equipment and construction machinery. They are going to double the footprint of their production site in Texas. So that shows that, I mean, you better ask JCB what their thinking is about this, but it suggests to me that they anticipate that Trump's tariff regime, a regime of this kind, will persist over time. And we were discussing previously: is this a negotiating tactic? Is this just a threat of tariffs, or does he really mean it? Well, it looks like he really means it, and that means that these tariffs are going to last at least to the end of his term as president. Otherwise, they will not be effective in the objective, which is to reshore productive capacity.
So
Yeah.
he's been effective in demoralizing the stock market globally. So yes, $2 billion US might have gone into the economy since the start of the tariff implementation. But we've seen trillions of dollars lost on the stock markets now. You said earlier that
Mm,
perhaps it's been overdone, but we need to talk
mm,
to the investors watching our
mm.
podcast who've seen their portfolio, the value of their portfolio be demoralized. So
Yeah.
is it a correction? Are we in a bear market? Is there going to be a recession? Should we
Well,
just bail out of equities altogether?
yeah, let's put it this way. It's very bad news if you're just about to cash in your pension, because it will have been affected. But look at it in perspective, because I've just taken a look at the European bourses, and pretty much all of them are back to where they were 6 months ago, and are in fact trading above where they were a year ago. And I know, in the last couple of days, this is Wednesday the 9th, we're talking 9th of April. In the last couple of days, the FTSE 100, which is our benchmark index in London, has slipped well below the 8,000 level, 8,000 being psychologically significant. It was up to 8,800 previously, but it's still well ahead of where it was 2 years ago. So again, all of on Wall Street, all the gains which have been accumulated since Trump was elected back in November have been lost. But I wouldn't say this is a bear market, because valuations are still at record levels for many of these companies. And by the way, so much of the Nasdaq is accounted for by those magnificent seven, the massive, tech trillionaire corporations, Apple and Microsoft and Meta and so forth, and Google and Amazon and Tesla, and many, if you take Meta, they're not really going to be affected by any of these tariffs because they provide services which are not going to be subject to reciprocal tariffs. Of course, Apple is a case in point because it produces a tangible product. Its range, as well as software, it makes iPhones, most notably. And it's not clear to me that the price of an iPhone in the United States is going to double tomorrow because there is a 104% tariff on imports from China. And it is the case that Apple's iPhones will continue to be largely manufactured in China, at least in the immediate future. But as I understand it, the US Customs has some discretion in terms of whether it determines that a good is fully manufactured in a particular country or whether most of the components in that finished product come from a particular country. So it's not clear to me that suddenly an iPhone is going to go from $1,500 to $3,000 next week. So we shall see. There are a lot of unknowns here, and I can't pretend, that this is not a very uncertain situation. But I mean, insofar as the stock market reaction is concerned, yes, there is some reason to suppose that corporate profitability will be affected negatively going forward. Yes, there is reason to think that the risk of recession has increased in the last week. But there was always going to be a risk of recession anyway, even if Trump hadn't imposed these tariffs on Liberation Day. And indeed, Germany is already in recession, and the finance minister suggested this morning that that recession was likely to persist over the rest of 2025. So, Europe has its own problem with growth, and it didn't need much help from Trump to go into reverse. But no, it doesn't. It doesn't help businesses planning their investment program. As I say, it raises all kinds of questions for the future, and it makes my life more difficult. But many businesses will find ways of adapting to these things, and there are ways you can do that. You can reshore. You can change where products are made. You can change the composition of different products, or you can take a hit in terms of profitability, or you can go for greater efficiencies in the production process. So, this is not the end of the world, Sarah. I wish people would stop panicking.
Okay, I did say, and in my introduction, I was hoping that you would be a market soothsayer. I mean, you have written to me in the past that equity markets are driven by a bunch of drama queens, while the bond markets are driven by boring men in suits. But I'm just trying to get my head around the
I stand by that. Yes.
I'm trying to get my head around the massive move in long-term US Treasuries over the past 2 days.
Mm.
There's lots of yin and yang in terms of equities and bonds, but
Yes.
I'm not sure about what's happening with those US Treasuries, and again whether
Well,
we should be concerned.
it is absolutely true that some of the big and most influential money men have been, have been making some very negative prognostications. I mean, there's Bill Ackman of Pershing Square Capital, there's Ken Griffiths of Citadel, and there's Jamie Dimon of JP Morgan, a long-standing boss of the biggest bank in the US. And all of them are forecasting that this is going to be, I think Bill Ackman called it, an economic nuclear winter. Well, honestly, I think that's overdone. Bond markets are sensitive to these things, but I've just been looking at the screen just a few moments ago, and yes, bond yields in the US have been creeping up in the last few days, particularly this morning. It's something like 4.35% on the 10-year US Treasury bond. But they were down from nearly 4.8 in January. So, there's nothing here which is of earth-shattering consequence. It does seem to be the case. There is some evidence that people are going out of selling treasuries in order to go for safe haven assets like gold, of course, which is now well above the $3,000 benchmark per ounce. And also into some safe haven currencies, particularly the Japanese yen and the Swiss franc. Um, but I don't think there's anything basically to worry too much about. And Trump obviously wants the Fed, headed by Jerome Powell, the chairman of the Federal Reserve, to cut rates. And I don't think he's going to get what he wants. There's some speculation that he's going to change the law surrounding the autonomy of the Fed, such that the US Treasury gets a voice in setting interest rates. Well, that would be hugely consequential and would promote uproar and probably have a very negative reaction in the financial markets. But I doubt if that's going to happen. But then who can say? I mean, late Roman emperors can do some very strange things.
But what is consequential is the living standards of the middle classes falling across the Western world. You have a theory about that, Victor?
Yes, I think that this is not sufficiently well understood, and it's something I've been looking at. And to some degree, I'm still perplexed, but I have a few ideas. And basically, I grew up in this world. I mean, getting on a bit these days, but I grew up in a world where the expectation was that living standards would rise every year. And the middle classes in Europe and in North America went from being, basically quite hard up at the time of the Second World War to being quite affluent. And we expected that this trend would continue virtually indefinitely. And along with that trend, in tandem with that, you see an increase in health across all metrics, and particularly the most important metric that economists look at to determine the well-being of a society is to look at life expectancy. And again, that shot up, from around the 60 mark back in the 1940s to over 80, and in Japan it's something like 86, 87 in the early 2020s. Now that has now stopped, and life expectancy in the United States and in the United Kingdom is actually now turning down again. So something has gone very fundamentally wrong. We know that, as we've been discussing already, growth is very sluggish in the UK and Europe, which is not driving living standards as it once did. I mean, the trend UK rate of growth between 1945 and the financial crash of 2009 was 2.7%. That's just the arithmetic average over that nearly 50-year period. It's never been more than 1% since then. So something fundamental has happened to arrest this onwards and upwards trend of increasing prosperity. Now, one reason which I think has been underestimated is that interest rates were held at basically near zero levels by the fraternity of central bankers. I call them the priestly caste, because they are all of a group, and they convene at a place called Jackson Hole in I think Wyoming every summer in conclave and in secret, and to swap their potions and their spells. But this group of people, largely men, I might add, determined that interest rates were going to remain very low or at near zero levels indefinitely, and they were wrong. And because of that basic miscalculation, they've unleashed inflation, which was manifest at the end of the COVID pandemic. You remember the last quarter of 2022, when famously, Liz Truss launched a reformist budget precisely at the moment that inflation was spiking and interest rates were going up. Whereas her timing was pretty bad, even though some of her economic measures were, in my view, justified. But since then, we haven't really been able to get the genie of inflation back in the bottle. And it is persistent, and it's 3% or thereabouts in the UK and in the US, with no sign of going down. Now, with the Trump tariffs, it is likely that inflation will increase, particularly in the United States, because the American consumer's shopping basket will become more expensive. And by the way, in terms of the impact of tariffs on consumer behavior, we have to look at what economists call price elasticity of demand, which means how much you respond to a change in price. Some of these goods are quite price inelastic. So the average Californian who buys a bottle of scotch every month, scotch whiskey, will probably still buy one, even if it's 10% more expensive. So that there are some consumption patterns, some buying patterns that won't change, but the cost of buying your basket of goods will increase, and that will feed through into higher inflation, and that will mean that there is less scope for the Federal Reserve and other central banks to cut rates going forward. Now, the expectation has been in the financial markets that there will be at least 3 rate cuts in the case of the UK in the second half of this year, 2025. Well, I think there's reason to doubt whether that will happen. And when the realization dawns that rates are not going to go down, there will be consequences in the bond market.
Oh my goodness. Oh, we've only got 1 minute left. I was going to say that could be the focus of another entire podcast on its own. But Victor, very briefly, Trump's administration ends in 3 years, 9 months and 11 days. So much time to do mischief,
Yes.
damage, rebalancing. What's he going to do?
Well, I think we have to live with a high possibility of recession, if not by the end of this year, next year. But I think we might just struggle through it. And I think that the UK is relatively well positioned. We have a 10% baseline tariff, as you know, as against 20% for Europe. But I just want to mention that it's not all about economics, is it? Politics is driven by economics and social trends, but also by psychology. And I just wanted to share with you this thought that actually Donald Trump is an old man in a hurry, and he's got very little time. He knows he's only got 3.5 years effectively left, because I think it's very unlikely that even if he were to, completely rip up the US Constitution, he would ever stand for a third term, because he's going to be 82, 83 come the next presidential election. But he's a man who has had a brush with death. As you will recall, he was very nearly assassinated back in the middle of July last year. And he is determined that he is going to make his mark in the short time available to him. And he feels that he has a historic mission to do this. And I think that he regards himself as a historical figure who is going to rectify many of the wrongs that have emerged in the liberal West over the last 2 to 3 decades. So, this man is not going to quieten down. And I must say that, I tend to watch the news conferences live, and they usually happen late evening UK time and sort of mid-afternoon Washington time. And whatever you think of the man, whether you like him or not, his energy level is quite extraordinary, particularly when you consider he's 78 years old. And, he's going to go out with a bang.
Okay, I don't know how to take that. Well, hopefully it's not painful. Victor, where Trump has energy, you have intelligence in spades. I'm wondering in our next podcast whether we managed to get
That's
through
most generous.
whether we managed to get through the podcast, next month's podcast, without mentioning Trump.
I doubt it. There are other things to talk about, though, not least the financial travails of the British Labour government. So maybe we'll talk about that.
We certainly will. Cliffhanger. Victor Hill, thank you very much indeed. It's been a pleasure.
Thank you, Sarah.